Hello and welcome everybody to a new educational video. We're going to be talking about market profiles, mastering price navigation and trusting your bias. So over here we got a nice schematic of IPTA market cycles. Now what is IPTA market cycles? First of all, this is about price delivery. So there are three things that can happen inside of a IPTA market cycle. We either have consolidation, or we have an expansion, or we have retracement, or we have a reversal. Now everything starts out with a consolidation, and following a consolidation there is always an expansion. So now you already know if you see a consolidation, it's unlikely to cause for a reversal. Now after that expansion there are three things that can happen. So we have a retracement, we can have another consolidation, or we'll have a full-blown reversal into expansion, and they all lead towards an expansion. Now we can make a distinguishment between reversal and retracement, right? Because now that retracement is not a reversal, so you can anticipate a continuation inside that already determined order flow. And a reversal obviously means we're gonna flip order flow. Now understanding this is crucial. Why? It will help you determine the opportune moments to enter the markets. It will guide you on when to stay out of the markets. And then the pivotal factor is aligning yourself with the market's expansion phase. Your ability to trust that you are in an expansion phase relies on understanding the previous phases by knowing our position within that IPTA. So over here we got always starting off with that higher time frame bias, right? We've got a DXY chart, weekly chart. Again, sell stops run into a key level, so we can determine our higher time frame bias. Buy stops above there, so we're going to determine price order flow on the higher time frame is bullish. Now take a look at this chart over here, right? And think about the IPTA market cycles. Think about the expansion, about the consolidation, the retracement, etc. We've got those sell stops down here rated into a key level. We've got the buy stops up here as a draw on liquidity. Now what I want to emphasize is that consolidation needs to happen above or below a key level. This is very crucial because then we can have a proper manipulation within that key level. So what does that look like? Over here we've got the consolidation, right? Just before that weekly order block. So we have a key level below us and we consolidate just above it. Now next we'll have a manipulation, which is an expansion lower, and then we'll get a reversal. So now in the IPTA market cycles we went from consolidation into expansion and then a reversal, and after a reversal there comes another expansion. Now this is the expansion phase. What does that look like over here? We've got a retracement, right? Because over here we consolidate again and then we're going to go down. So what does not occur after a consolidation will not reverse, right? So we have a retracement phase over here, and after that retracement phase we'll get another expansion like we showed in the schematic of IPTA market cycles. Now when does a market cycle switch to another? It is always at a key time, right? And over here we've got that manipulation lower and then we reverse into that market cycle, right? And this occurs during a Friday for a TGIF, and that is because of NFP. Over here we've got a Discord screenshot, right? Why we called this direction, and we can clearly see the key level daily order block, right? And then when does a reversal happen? We also outline that over here, right? News at 8:30 and 10 a.m. So what does that look like on the charts? You can see that over here, right? We can see prices dipping down lower. Now you can be more calm about waiting for price action to flip in your favorite direction. Why? Because now you know that if you see a consolidation prior and price moves lower, right, but the draw is higher, you can stay calm and you can identify that this is actually a manipulation phase, right, or a retracement. So there should not be a reversal from this consolidation. You can see same thing over here, right? Retracement lower into a key level, below sell stops, and then a continuation higher is imminent. Now over here we've got another DXY chart. This is the daily chart. We're outlining those key levels, right? We had that daily fair value gap over here and the daily order block. So these are key levels for longs. If we go to the 15-minute chart, now we can actually look for those market cycles, right? So I want you to look at this chart and think and see where is the consolidation happening, where is the manipulation happening, right? Where is that retracement most likely to happen, or where is that reversal most likely happening? So if we Go to the next slide over here. We've got this entire accumulation phase, right? Because we're going sideways in the same range over here. And note how that just happens above that key level, right? We did not hit the key level while we are accumulating over here. So we start off with a consolidation phase. Now, what does not happen after a consolidation? A reversal, right? So if you see price move down after a consolidation, you can already be calm and identify that this is not the real move and this is not a reversal, right? So just wait for that key level to get hit, right? That manipulation phase to happen. And remember, when does the market profile switch? It is at a key time. So we had that New York session news rise. We had a 10 a.m. news. So you can anticipate that the 10 a.m. news will start the reversal into that key level, and then the draw on liquidity is higher. So we have a entire consolidation, manipulation at the key time, right? With that news release, and then expansion higher, which is a reversal, and then you can see another consolidation here into another expansion. So the distribution phase that comes from that 10 a.m. news is that reversal after that manipulation phase, right? So keep an eye on those consolidation areas, an eye on the expansion areas, and identify, is this actually an expansion or a retracement, right? Now we're diving a little bit deeper into the 3-minute time frame, and we actually called this price move up, right, as explained in the DXY video as well. 10 a.m. news causes for a reversal into a key level. If we look at this, we've got a accumulation prior to that news release, right? Then there's a key time manipulation to switch that market cycle, right? So we dip down lower first, so we expand lower and then reverse, and then there is a fair value gap left behind, which is perfect for longs because everything is lining up, right? We're going from a higher time frame consolidation into a expansion lower to reverse, and then on the lower time frame it's confirmed as well. Now we anticipated that live before it happened, so why can we read price action like this? Because it's the understanding of that IPDA market cycles, right? So you can see here as well, the MMXM trader posted this, price needs to reject accumulation hard if we are bullish. This is looking good, in my opinion, if we pop up hard after one more drop. Why do we want to see one more drop? Right, because we had that accumulation phase over here. So it was expanding lower and then it started to accumulate. So what is likely to happen? We're going to dip down lower first, right? Expanding into a reversal at that key time. This is why we wanted to see higher prices at that key time as well. Now, let's talk about IPDA as a daily range for the classic buy and sell day profile on Euro USD and GBP USD. So we've got a nice schematic over here, right? The IPDA daily range structure. First of all, we need to have key levels and we need to have a draw on liquidity. Now, if you trade a classic buy day profile, we want to see Asia session consolidate, right? And keep your mind on that IPDA market cycles, right? From a consolidation will never reverse. So this is perfect for a classic buy day situation over here. So accumulation during Asia from 7 to 12 a.m., right? Higher time frame, discount level resting just below that accumulation phase, right? This is important. We want to see that consolidation just before that key level, because then the manipulation phase can actually hit that higher time frame discount key level, and then we can expect this to be the manipulation. And this often happens during London session between 2 and 5 a.m. This is the London session kill zone, right? We always mark out New York midnight opening price so we can determine that the expansion lower is actually manipulation. And then we can have a reversal which leads to an expansion higher. Now New York session distributes higher as well, which is from 7 to 10 a.m. Now if London expands higher as well, that could be the case, and we trade above New York midnight opening, London will distribute higher and New York session will still be a expansion higher if the draw on liquidity has not been hit yet. And then the profile ends up with a London close consolidation. So at the end of New York kill zone afterwards, we have London close kill zone between 10 and 12, and then it tends to consolidate afterwards. Now the same thing with a classic sell day profile, right? We've got a higher time frame key level first of all, and we need to have a draw on liquidity. Now we want to see a Asia session accumulation again, right? our IPDA market cycles, consolidation, and then we want to have that, again, very important, before that higher time frame premium key level. Then London session manipulates higher into that key level, and then we'll see a distribution phase lower. And again, if the drawn liquidity has not been hit and London has expanded below New York midnight opening price as well, then New York can also still be an expansion phase. The only way I would skip out on New York session if London also manipulated and distributed the entire drawn liquidity, because then it's more likely New York session will stay and consolidate. But if this is like this, right, we have that key level hit during London, and then New York will be an easy distribution phase lower. So over here we're talking about those classic sell day profiles, right? We've got Euro USD daily chart. We hit a key level, right? We had a breaker, fair value gap. We hit that, closed inside, and then we focus on the next day for a classic sell day profile. Now, what does that look like? Right? We in the key level, remember, this is important. We have that Asia session accumulation over here. Then London session takes out the buy stops. So we hit a key level up here with a run on liquidity, and then we want to see it trade lower. New York session will be a retracement into another distribution phase, and it will complete a market maker sell model to complete that sell day profile. Now, how do we apply the IPDA to the index futures opening range? So over here we've got Nasdaq daily chart. Always mark out your premium and discount levels, right? We've got discount low until the discount high up here. We can see price dips back into discount and comes over here, and we're going to be focusing on using that key level, right? We want to have a key level in discount, preferably with SMT. That makes it even higher probability. So if we zoom in, 4-hour chart, we hit that daily fair value gap, and we can see price dips into here. Now let's identify the market cycles, right? The IPDA market cycles. So over here we've got those IPDA market cycles outlined, right? We've got a nice accumulation phase, and again, note how this is accumulating just before that key level, right? This is important. We want to emphasize on that. Now, after that accumulation phase, we have an expansion lower, which will be the manipulation into that key level, and then a reversal occurs afterwards. Now we can trade the distribution phase afterwards because we already hit that key level. We had the market cycles, consolidation, expansion, reversal, so it's likely to be another expansion up higher. So zoom in a little bit more, right? Mark out your discount level low into premium high. So now we've got a dealing range where what we can work with, right? And remember, we had that consolidation into expansion lower into a reversal, key level hit, SMT on the lows. Then we have a nice fair value gap left behind for another expansion up higher, and then afterwards down close candle should support price higher, as we did over here with this wicks lower, and then this as well. Price comes back into it and then expands up higher. Diving into the 15-minute, right? We want to find an opportunity over here. Again, market cycles, right? Accumulation phase over here. Then price dips lower, taking out the sell stops. So we have an expansion, then a reversal. So we can expect a manipulation phase from that consolidation, and then an expansion up higher, which is the reversal. And then order flow has flipped bullish, and now you can look for the distribution up higher. So where are the opportunities, right? You always want to see key level, stop hunt, change in the state of delivery, right? So stop hunt down here, reversal into expansion. Now we are in the distribution phase higher. We can see another stop hunt on this 15-minute low, then a distribution higher. Then we're leaving behind a 15-minute key level, which is a bullish order block, and price hits that again. And we can also see there's a tiny consolidation here. So it happens fractally everywhere, right? And then it dips back lower and then reverses up higher on this fractal range. Now, when are these market cycles kicking in? It is at a key time as well, right? So we use key levels, but we also need to use key time. So that key time is that 9:30 equity open, right? And then the distribution phase happens from here. Now the manipulation happens at 8:30, right? Before the markets open up. So we had the accumulation, 8:30 hits into a key level, right? We had a 15-minute order block, and this is obviously a 2-minute chart. So this is a lower time frame than the 15-minute. And we're using again a key level to find our accumulation, then manipulation into that key level. And notice how the accumulation again, just above that key level. Then at the right time, we manipulate down lower, then a reversal into an expansion. And then we can see over here, 930 distributes higher into that larger accumulation high. Now over here, we've got the 4-hour chart again, right, from Nasdaq. Daily key level hit, stop on down here, and then again a key level. So where do we want to find our opportunity? This is the 1-minute chart, right? We have a 4-hour order block. That is the key level. So we wait for price to dip back into that key level, and notice how we start to accumulate again just before that key level. Now price manipulates down lower, causes a reversal into that key level, and then expands up higher, and we leave a fair value gap behind. Break of structure, and now we can use this level for a long setup. Then at the end we complete the market maker buy model, and that entire IPTA market cycles was completed as well.